Hi, a very good evening or good afternoon to all of you here. Thank you once again for coming to join us on our day 2 of the Young Investors Trading Challenge Bootcamp series. I am Junkit and I will be your host for today. All right, so today we will be mainly covering on formulating a trading plan as well as doing a platform walkthrough of the Phillip MT5 platform that you'll be using for your trading challenge. And the speaker for today would be Yi Jie. All right, so I think before we start the session, I think it is also important for us to go through this disclaimer that anything that we'll go through during this session is only for educational purposes only. So this does not constitute as an investment advice or trading advice for you because we cannot take into consideration your personal investment objectives, financial situation, as well as your risk appetite. So we do hope that you can benefit from this session. And let's look at the outline of this session. So the first portion I would be sharing with you on this trading challenge that we have. So for those of you who have joined us yesterday, so this portion will be like a recap. So basically, for the benefit for those who missed out our session yesterday, so I'll give an introduction of the trading competition. And the second portion, which is the huge chunk of this session, would be conducted by Yi Jie. So he'll be talking about formulating the trading plan as well as guiding through our MT5 platform. Okay, and thirdly, there will be this special announcement of this perk for those of you who are not here yesterday. So we do hope that you can stay all the way to the end where we share with you what is this good perk that we can extend to you during this campaign. Okay, so introducing the Phillip Nova Young Investors Trading Challenge. So this is a 2-week trading challenge that will begin next Monday, 5 a.m. Singapore time, all the way to 9 September, 12 p.m. Singapore time. Okay, and in this trading challenge, we aim to provide the platform for novice traders aged between 18 and 30 to hone their trading skills and to put it up against friendly competition. And then the top prize winner would be walking home with $1,000. Okay, so to share a bit about the price structure, so like I said, the top prize winner will be walking home with $1,000. The second prize winner would be entitled to $500. The third prize winner would go home with $3,000. With $300. And then the good news is for those ranking number 4th all the way to 23rd, you are also entitled for $50 of trading credits. Okay, and during this competition, what you'll be trading is Forex and CFD in this MetaTrader 5 demo environment with an allocated equity of $100,000. So basically, these $100,000, they are fake money, paper money for you to play around with to experiment your trading strategy. And at the end of this trading period, we'll be looking at the account with the accounts with the highest equity, so in descending order. So the top 23 would be entitled to a total prize pool of $2,800. Okay, and on the screen here, I have shown you some of the important timelines that you should take note of. The firstly is like the 2 days trading bootcamp that we have from yesterday until today. We do hope that you can benefit from these 2 days of sharing sessions to increase your chances of winning during this trading challenge. So today and tomorrow, so these 2 days would be disabling trading access on all of your demo accounts. Okay, and then we would be resetting the account balance for some of you who have placed a test trade. Okay, so your account, you wouldn't be able to place any test trades all the way until Monday, 5 a.m. Singapore time. Okay, so that marks the start of the challenge. It runs all the way until 9th of September. Okay, and on 14th of September, you would be knowing if you make it to the top 23 winners. Okay, and throughout this trading challenge, I think the good news I want to share is that you're able to keep track of the progress of the leaderboard. So we will encourage you to scan this QR code to follow our Phillip Nova Instagram page, where we will update on the top 10 leaderboard on a daily basis. Okay, so you'll be able to see every day how our top 10 participants are making, how much money they are making on a daily basis. Okay, so for now, I think maybe we give you like 10 seconds for you to capture this QR code. Okay. So I hope all of you have followed our Instagram page to keep track of the daily leaderboard next week onwards. Okay, so at this point, I'd also like to make an important administrative announcement. It is based on the account that you'll be logging into. We have received some inquiries where you are unable to log into your platform. Firstly, um, after you have signed up for this trading challenge, you will receive an automated email. So in this email, you have a few important information. Firstly, is your login ID and password, okay? And secondly, it is instructions to download these platforms that you'll be using for this challenge, okay? For the record, our company, Phillip Nova, we offer two types of platform. The first is Phillip Nova. Second is Phillip MetaTrader 5. And this trading challenge is hosted on Phillip MetaTrader 5. Okay, so do make sure that you've downloaded the correct trading app, and then you'll be logging into to this MT5. Okay, so for those of you who are interested to log in to look around from today until Saturday, 12 p.m., you'll be logging into the Phillip Futures demo server. All right. So what happens on Saturday, 12 p.m. is that we will be renaming this server to Phillip Nova-demo. Okay, so maybe you could take a screenshot of this. So from Saturday 12 p.m. onwards, you'll be logging into Phillip Nova demo, and this should remain the same throughout the trading competition. Okay, should you have any trouble or require assistance, you may reach out to our IT department at this email that is displayed on your screen. And for those desktop application users, so in case you've already downloaded this app for now, the reinstallation of the new installer over your existing app is also required after Saturday 12 p.m. For the correct servers to display. So we will encourage you to re-download the installers to make sure that you're trading on the right environment. Okay, so once again, if you have any questions, don't hesitate to reach out to us via the email, or there's another pftertiary@phillip.com.sg email that we've been communicating with you through. Okay, so that is also fine. All right, so without further ado, I'd like to introduce the speaker of today. So his name is Yi Jie. Okay, so he's a strategist and also a manager at Phillip Nova. And as part of the Forex and Bullion desk, he specializes in the business development of products and platforms to support the trading needs of clients. And Yi Jie is also very involved in engaging the trading community by regularly organizing campaigns, events, incorporating trading features that will benefit you. Okay, so he is also an expert on the Phillip MT5 trading platform. So for today's sharing purpose, I think he is the best person to be conducting this session to share with you. All right, and his market views and comments have also been regularly published in the Business Times, 联合早报, and Zoo Online. Okay, so while I try to change the presenter to Yi Jie, okay, I think we can welcome Yi Jie, and Yi Jie, you feel free to unmute yourself and say hi to everyone. And I shall pass the time over to Yi Jie.
Hi everyone. Thanks, Junkit, for that very kind introduction. And I also want to thank all of you for taking time to be here today. I just want to quickly check if everyone can see my screen. You can just type yes in the chat, so they will let me know that you guys are seeing my screen perfectly, right? So I can go on.
Yes, I think we can confirm that we are on the screen. Thanks, Yi Jie.
Okay, cool. Thanks for that confirmation, Junkit. Yep. So once again, thank you for taking your evening to be with us today. In today's session, my objective is definitely to go over the key components of what is required in a trading plan, right? Because a trading plan is critical. It's important as a trader. Many of us might not think much of it, but it's actually a very pivotal tool that will enable your success, whether or not it's in a trading challenge or whether or not it's in the real trading world, right? So some concepts will be repeated from yesterday, things like risk management, because we do want to emphasize again its importance when you are going through the challenge, things to take note of. So without further ado, let me move into my slides. So again, let me just share the disclaimer once more that whatever is covered today does not constitute investment advice should you wish to trade, right? Because it does not account your specific investment objectives, financial situation, or your risk appetite. So just wanted to make that clear. So if you do hear any investment advice, right, you have heard wrongly. Okay, so let me delve into the content, 5 of them today. So first, what is a trading plan, right? I want to uncover what is it, why is it important to have a trading plan? And then we'll go through some questions on risk management. There will be quizzes in this area, just to test and see what your understanding of risk management is, and maybe to help adjust some of your mindsets, right, about risk management. So 3 key elements of trading rules, which are part of your trading plan. There is a slight error there, so there's no post-trade management. I apologize. So there should be a MT5 walkthrough. And last but not least, how should a complete trading plan look like? All right. So let me dive straight into a trading plan. So basically, many of us, before we travel, before we work out, or even in our internship or in school, we have a plan, a study plan, something to follow, something to make sure that we are on the right track. And a trading plan is not so much different from that. Basically, it captures the A to Z of things you need to do to achieve an objective, right? So in our case, is to be profitable, right, as a trader. So it should contain a checklist of conditions that has to be fulfilled before you take a certain action, and it gives you a clear definition of set parameters within a strategy, right? So why is it so important for you to have a trading plan, right? Number one, it helps you to avoid trading with no edge in the market. So I'm not sure how many of you know this, but trading without an edge almost guarantees that you will lose most of the time, right? Because trading without an edge means over the long term, you are at a disadvantage. You do not have a winning percentage in the market. So this is something I will delve deeper later on. Number two, it prevents emotional trading. Now, this is very real, especially for those of you who have a live account and might be already trading, right? So some symptoms and some display of behavior of emotional trading are things like over trading, right? Maximizing the margins that you have to place position, leaving no buffer at all, right? So that's a sign of over trading. A revenge trading, when you make losses in a certain contract pair, taking for example a Forex pair, and you want to trade until you make your losses back on that pair. So these are all irrational emotional behavior that cannot be explained, right? Simply driven by the 2 key emotions that we feel, greed and fear, right? So number 3, it restricts inconsistent and non-replicable outcomes in trading. What do I mean by that? So let's say today you happen to hop in the market and you decide to place a position, right? And that happens to be a winning trade. So good for you. But what happens next? Are you able to replicate that again and again? And I think that is absolutely key. Without knowing what are the triggers for you to replicate the same outcome, it is difficult for you to remain consistently profitable. And consistency is key, right? Not just, you do not want to be profitable just once or twice, but you want to be consistently profitable as a trader. So what are components of a trading plan? Right, these are the 3 things which I will go through later in the final outlook of how your trading plan should look like. But each component addresses a critical question before trading even happens. Right, so these are things you do need to ask yourself. And I believe number 1 is quite common, right? As someone starting out in trading, one might ask, how much should I be risking a trade? Let's say I have a $1,000 account. Should I be risking $1,000 per trade? Should I be risking 500? What is the right amount? So second one would be your entry trading rules, right? What must happen? What are the conditions that must appear before you decide to enter a trade? And then your exit rules. So this applies to trade that you have entered. What must happen before you decide to exit? So many people think that entry is the determining factor to whether or not you remain profitable as a trader. But many do not know that there are so many scenarios that are related to exit strategy that causes a trader to not be profitable. For example, right, You may enter a position early and it goes in your favor. But what happens when volatility occurs and it whips you out of that position in the opposite direction, right? So knowing how to exit is critical as well. And these are the plans that you must have in place before you start trading. Before any trading can happen, this must already be set in place, right? So that covers a trading plan. So let me quickly go through risk management and a couple of quizzes to just test your understanding of what you have learned from yesterday's session and to see if, for those of you who did attend, how much did you retain? Now, the first question about risk management, it boils down to a question that you ask yourself, right? So how many of you thinks that it is the left? How much am I willing to risk per trade? And how many of you think that it is on the right? How much should I risk per trade? So we're talking about risk management here. So go on and interact with me. Key in your answers. Whether do you think it's the left or the right? Is it how much am I willing to risk per trade, or how much should I risk per trade? So go on and enter your answers so that I can see roughly or have a consensus of what it is that you think. Okay, for the review, right? So it should be the one on the right. It shouldn't be the question on the left about how much you're willing to risk, because willing is subjective. It differs from trader to trader, and it assumes that there is no logical method to calculate risk. And in fact, that is untrue. So whenever you think about risk management, just think about this question that you have in mind. How much should you be risking per trade? Okay, pop quiz number 1. You have a total balance of 50,000. You should aim to risk for A, not more than $100, B, whatever amount you feel confident of. The more confident, the larger the amount, or C, 1 to 2% of your account balance. So go ahead again, help me fill in your answers in the box, in the chat. Just key in what you think is the right answer, and we will review that shortly. I'm going to give you a couple of seconds. Okay, so is that A, not more than 100, B, whatever amount you feel confident, right? The trade that you feel more confident of, the larger amount you risk, or C, 1 to 2% of your account balance. Okay, I see many answers streaming in C. I see some B. Well, let me review. The answer should be C. So those who are answering B, please be careful. Please do not take that mentality into the trading challenge. Let me explain why, right? Why not A? Some of you might ask. Isn't it okay if I risk lesser, right? So you do not want to risk so little that the rewards are also insignificant, where you are not utilizing the right amount in your trading. Because for each risk or each trade that you are looking at a certain amount of reward, right? And so the right answer is not 100 as well, right? Because that would be too little for an account size of 50,000. Definitely not B, you know the answer. It is not about how much you feel you should be risking, or how confident you are of this trade. So it's 1 to 2% as a general rule of thumb, right? Whenever you have an account balance. So this is how you determine your position sizing, right? So principle 1, risk per trade is a function of your total equity balance. Okay, number 2, you have a strategy of a 65% win rate. How many winning trades do you think you can obtain in the next 10 trades, right? Is it A, 6 trades, B, 0 trades, C, 4 trades? So go on, input your answers in the chat. Let me know what you think. I see a question about whether the recorded session will be sent. The answer is yes, it will be sent to you. Okay, I see some answers streaming in. A, 6 trades. Any more takers? How many trades do you think you would win in the next 10 trades? 6, A. Okay, sounds logical, right? 65% win rate in the next 10 trades, 6 trades. But this is actually a trick question, right? Because no one can guarantee in the next 10 trades there would be a win rate of 6 trades. Your guess is as good as mine. It could be 6, it could be 0, it could be 4. Nobody knows. And this is the principle why. So in trading, the principle of large numbers, let it play out. What does that mean? Right? It means that as the sample size increases, the mean gets closest to the average of the expected outcome. So let me put this in layman terms. Basically, the more trades that you place, the more you allow your trade to play out in your favor. So what does this mean? Even with a 65% win rate, I can actually lose the next 10 trades. But if I were to trade up to 100 times, it is more likely that I would have 65 winning trades out of 100, right? More likely than 6 out of 10. So this is a game of probability, and I've included a roulette table at the side, right? So it's a common illustration I like to use as a parallel to trading. Of course, I do not mean trading is gambling, but the parallel is this, right? So on a roulette table, it seems that there are equal number of black and red spots. So if you were to place your bets on either one of them, your thoughts would be that there are 50-50% chance of winning. But here is how the casino gives themselves an edge. There is a pocket zero, which is green, that is neither red or black. So this tilts the odd in their favor. If you were to do that, it is no longer 50-50%. And through a large number of bets that are placed, right, they will always have the edge over you. You are only getting a 49% at best. So they have 51%, and the 2% over you is something that they are banging on to win. Right, okay, the last question that I have. If you're risking $100 per trade, you should be looking at the possibility of making a return of how much? Would that be $50, $100, or $150 and above? So key in your answer. What do you think is the right one? Or what do you think you feel is the right answer? $50, 100, or 150? Okay, let me review. The answer is 150 and above. Now, I've purposely added the percentages to mislead you, right? So $50 out of 100 seems like a huge gain, right? If you could look at investment maybe in the stock market, a 50% profit is a nice and tidy sum, right, to keep. And 100% profit is even better. So am I being greedy by aiming 150 above, right? The answer is no. So this is the reason why. Imagine with me, every trade that you win, you only win a $50. And every trade that you lose $100. Play it out over the long run. What would that look like in terms of profitability, right? So even for $100 profit per trade, and you lose $50, you lose $100 per trade, you gain $100 per win, right? That puts you, even with a strategy of 50% win rate, which is quite difficult to achieve, you are at break even, right? So you want to ensure that you have a risk to reward ratio that makes sense, that determines your eventual profitability, right? So thanks for your participation. Let me move on to the next section, right? So we are looking deeper into what are some of the key elements of a trading of trading rules, right? So there are 3 of them that I would like to highlight today. One of them is the overall trend, identifying what trend is the market in. Is it in an uptrend? Is it in a downtrend? Or is it in a sideways movement? Secondly, what are some buying and selling zones, or some of you may call it support and resistance, right? And last but not least, what are some triggers that you need to see to determine confirmation that your trade entry or your trade exit. So a common mistake that many amateurs traders have, or traders who are starting out their journey, typically think that, oh, I just need to identify a trigger, right? So they make the mistake of looking at one or two indicators which they think is a holy grail, right? So one very common mistake is looking at a oscillator like an RSI or a MACD that displays overbought and oversold condition. So it seems simple enough, right? Sell when it's overbought, right? And buy when it's oversold. So that is the typical mindset that is being carried into trading. But I'm here today to debunk that and tell you that it is more than that. And it takes 3 of these factors to display confluence before you can be sure that your strategy works. So what are some tips? What are some tools that you can use to identify market trends, right? So one of them is exponential moving average. And the other one is drawing trend lines, right? Simply for you to determine what is the general direction of the market. So how can you use exponential moving average to determine trends? And these are all tools available on Phillip MetaTrader 5. So what you can do is to apply one exponential moving average on a time frame higher than what you are trading. So for example, if you are trading in the 1 hour time frame, you can place a moving average on the 4 hour time frame. So this will give you the bigger picture. Where is the market moving? Is it up or is it down? Right. So if the exponential moving average is pointing up and price is above it, it is clear, right? That's an uptrend. But if the exponential moving average is pointing downwards and price is below, then it's a downtrend. So in this screenshot that I've taken, you can see the transition, right, from uptrend to downtrend, from left to right. So that is one way you can start putting into practice, identifying the bigger trend, the bigger picture in your trading. Why? So the question is, why do I do that? And so some of you may have heard the phrase, the trend is your friend. So what does that actually mean, right? So statistically, it is proven that until a major reversal happens, price will tend to follow in its existing trend. So by looking at the overall trend, you are more likely to determine the continuation of the direction. So what lesson is there to be learned here is that once you identify the trend, either up or down, you only look to take position that follows the trend, right? So if it's an uptrend that you spotted, look only to take long positions. If it's downtrend that you spot, look only to take short positions, right? So second tip to identify support and resistance, or buying and selling zones, right? So one of them is the utilization of channel and trend lines. Number 2, horizontal lines. Or number 3, other drawing tools such as Fibonacci retracement tools. So some of these are more advanced, but it has one purpose, which is to tell you where is the source of action coming from. Where do price typically go towards or bounces away from? So from this illustration, you can clearly see the action of prices are being captured within certain points that are highlighted. So looking at channels, you can see that a price rise to a maximum of the top band of the channel where the purple line is residing, right? And it falls to a maximum where the bottom purple band is capturing the price, right? So horizontal lines, it gives you the same display but in a different position, right? So that uses horizontal lines. So let me go a bit deeper into how you can use horizontal lines to identify buying and selling zones. So basically, support and resistance can exist in the form of horizontal lines when 2 or more coinciding points are joined on the chart. So there's an exception to this rule, that is when it is the highest and lowest point on the chart. So typically a rule of thumb is that on the highest, it requires 3 or more points to be coinciding within a horizontal line to be taken as a support or resistance, right? So the lower points being support, the higher points being resistance. And so the exception that I was talking about is if price moves towards the highest or lowest point, there isn't necessarily a need for there to be 2 other reoccurring coincidence at the location, but they themselves act as a natural support and resistance. Right. So lesson to be learned on buying and selling zones is that you want to trade with key areas of value, right? Identifying support and resistance on our chart tells us where does price tend to move towards and away from, right? So you know when prices reaches that region or that area, right, there is bound to be movement afterwards. And this movement is what will allow you to capture a trade. So once the support and resistance is identified, only look to take position that aligns with the behavior. So what do I mean by this? If prices are resting on a support that has been tested and proven, right, you look to take long positions. If prices are coinciding with a resistance zone, then you look to take short positions. So this is what I mean by trading in alignment to key structures. So that's the second lesson that forms part of your trading plan. So the last one that I spoke about is triggers. How do you identify triggers? So there are 2 common ways. I believe this is non-exhaustive. You can actually Google technical indicators, candlestick patterns, and these are information that can be easily found on the internet, so I won't go too deep. But basically today's session, I want you to identify the use of triggers, right? The use of indicators and candlestick patterns. They are not meant to be used in isolation, but when used in combination with other factors, it can be a very powerful tool to tell you when to take action and basically when to pull the trigger to initiate a trade, right? So one popular one would be oscillators, as I mentioned earlier. It identifies overbought and oversold zone. So it tells you when prices are too high or too low. And then candlestick patterns is another one that reveals to you price momentum, right? And what is price likely to do. So one typical example of an oscillator, a popular one would be the MACD indicator. So there are 2 ways typically that the MACD can be utilized. When the line and the histogram are below the 0 line. So that is where you see the red rectangles are highlighting in the MACD indicator. So both are below 0, right? So that signifies that the bearish momentum is higher than the bullish momentum. So that results in price going downwards. So the second way to use it is if the signal histogram, which are the vertical lines, stronger than the MACD line, which is the red line, or rather the red curve, right? So it indicates to you how strong or weak the prevailing trend is. If the signal histogram is above the MACD line, it shows a strong trend. But if it is below, it shows a weakening trend. So if you look all the way to the left, you notice that both the MACD line and the signal histogram is above 0, the neutral line, but prices are still falling. Now, what is the reason? You notice that the histogram actually fell below the MACD line, and that is a signal of a momentum that is declining. So the reverse is true in both cases. You can use it either way to determine bearish or bullish movement. Now, so what's the lesson to be learned for confirmation triggers? Right, to identify the strength of price momentum and key factors like overbought and oversold is critical. It can increase the probability of a successful trade. However, I do want to caution and repeat again that it is not meant to be used in isolation, but rather in conjunction with the first 2 lessons that we learned. So let me just recap a bit. The first lesson we learned was trading with the trend, right? If the overall trend is an uptrend, you only look to go with long positions. If the overall trend is down, you look to go with short positions. The second one is buying and selling zones, support and resistance, right? So typically, according to the market structure, you would want to go long at support and you want to go short at resistance. And then last but not least, confirmation triggers, right? Whether price is indicating overbought or oversold condition, or whether candlestick pattern is indicating a loss or gain in momentum. So if you were to place these three together, what would a trading scenario look like? An ideal scenario, right, would be, for example, if you were to plot on the chart an uptrend using an exponential moving average, right? So the larger picture is one of the uptrend, and then you notice that price is reaching a support level, right? Because support means prices are likely to go higher. And at the support level, you notice that the MACD indicator is indicating a oversold condition. So these three factors line up very beautifully to give you a picture to pull the trigger for a long trade. So regardless of the contracts you are trading, this gives you the confidence and confluence required for you to place the trade. So this is what I meant by all these three has to be aligned in order for you to decide whether or not to take a trade. Cool. I hope so far this has been informative for you. If you do have any questions, feel free to drop them in the box. If I miss them, my colleague Junkit will be able to pick it up later on for me to answer. Right. So without further ado, let me go through our platform, which is the MetaTrader 5. Again, just to check if you are able to see my screen, just type in yes, so that I know that you do see my trading platform. Junkit, can I just check, are you seeing my screen?
Yes, we are seeing your screen.
Okay, perfect. Thank you. All right, so this is the MetaTrader 5. This is the platform that you'll be using during the trading challenge, right? So it is important to be familiar with it. If you have not logged into it, my recommendation is from today onwards, right? After this walkthrough, do log in, play around with the platform, and you have any questions, we are happy to answer that for you. So it may look complex and complicated as a trading platform would at the beginning, but after I explain it to you, you notice that the MetaTrader 5 is actually extremely intuitive. It uses everyday motions in the computer as functions, right? So let me go a little bit deeper into that. So let me share with you the 4 key pillars or 4 key panels within this trading platform. So we have the charting panel, right? So this is where you see the prices of a particular contract pair. So you have the market watch panel. Over here, you see symbols where you can populate with contracts you're interested in trading. So a quick tip here is you would like to see everything that we do offer, go right click and select show all. Then you will see over 500 contracts that we offer on the Phillip MetaTrader 5. Right? But if it's too much for you, hide all and only select the ones that you want to add. So for example, if I want to add Google, right, that is what I'll do, enter, and the bid and ask will be populated. So you don't have to be too concerned with the other tabs. They just give you more information about the pair. For example, for Google, what's the high and what's the low, daily change, and open and closing prices. Right, this is another view that you can have if you would like. So at a glance, it tells you more information basically in a graphical format. So this is the tick data, which might be irrelevant for this context. So this is the Market Watch panel, basically a place where you house all the contracts that you are watching and you are interested to trade. So moving on into the Navigator panel, right? This is something like your library. right? Library of different information that you wanna look at. So for example, over here I can see my account and match it on the top left, 3252. So that belongs to me. That is my name, right? So as Junkit mentioned earlier, right now we are still Phillip Futures, but after the name change exercise on Saturday, 12 p.m., you should see this as Phillip Nova demo. So just to reiterate that again, under indicators, right, this is the area where I feel most of you would be interested to explore. So we have oscillators, we have trends, trend indicators for you to apply. And to apply this to the chart, very simply, what you would do is to click, drag, drop, select OK. And immediately it is populated. So very intuitive functions like click, drag, drop, and right click. So these are the things that you're able to see. So moving on, this is the charting panel, as I've mentioned earlier. But aside from viewing prices, right, how else can you customize this to your liking? So not to worry, this is the default view, but definitely not one that you have to stick with. So if I were just to right click, I can actually go to properties and I can change different themes, color on white, black on white. Personally, this is my favorite, and this is the preview window. Go under common, show. This would help you edit the look and feel. So I wouldn't like the grid. And this is just how I like my charts, right? So you can play around with the different functions or the different look and feel. To remove the indicator, simply right click and delete, right? So, and it's gone. So one of the key panel would be the Toolbox Panel. So it will be populated with different key information such as your trades, trades that are live, trades that are pending, and your historical trades. So right now you can see, based on all the positions that I have, my floating profit is 1,800 USD, right? And the trade that is most profitable is this euro dollar trade at 15,000. And the most unprofitable trade would be this 3 euro dollar trade as well, in the opposite direction. So this is basically how you can view the trades that are live, right? So if you were to move on to your historical tab, this tells you the list of trades that you have done before. So it gives you an insight onto what price levels you have entered and what price you have exited, the profit and losses that are made in relation to the trade. So the news panel over here is populated with up-to-date push news. So it is not on a pull basis. Each time there is an update, it will give you the latest headline over here. So there are a few reputable providers that are part of our network. So FX Street is one of them, giving up-to-date Forex news. And then you also have Trading Central, right? So Trading Central coverage is slightly wider. You do have indices, commodities, so on and so forth. So over here you have the economic calendar. So for yesterday's session, Kayong briefly talked about fundamental analysis, right? And economic data is one key portion of that. So over here, I think what you want to look at is results release, right? It gives you the previous, forecast, and actual, right? So aside from this, I quickly want to touch on the tools that are unique to Phillip MT5. So over the past couple of years, we've been working hard to bring on different trading aids that would value add to our customers and traders on our platform, which you will get to experience as well for free for a limited period of time. So there is Trading Central and there is Signal Center. So just a very quick view of how Signal Center looks like. I've already preloaded the screen. So over here, you can see basically different opportunities that have been highlighted with varying levels of confidence. So what you want to do as you explore this is to click into the trade. It gives you a detailed view of what the trade idea is about. What are some events that are related to this, and select trade now. Now, when you select trade now, a very powerful thing happens. Your order ticket is immediately populated with the levels of entry and exit. Of course, this to say that not all signals are triggered, right? Most of them are on a pending basis. Some are hits, some are miss. But on the data that we have over the long run from 2017, right, there is a positive expectancy in these strategies. So the good news is that even in the trading challenge, you are able to use these tools to trade to assist you in your trading. Of course, this is up to your discretion whether or not you would like to use it. So the way to implement this to your chart is simply by clicking, dragging, and dropping. Select yes, and then OK, and this should be populated. But I do want to add that this has to be downloaded separately. It is not, apologies for the technical error, but this is what you should see. This is not immediately included in your platform. You do have to download it on our website. So Trading Central is the second tool that we have included in our repertoire of trading tools. So again, if I were to click drag and drop, you should see something start to load. A pop-up window will appear. I won't go too deep into it, but I'll take you through one of the popular features that we have, which is the Trading Central Market Bus. When you enable, what you see graphically is a display of multiple bubbles and the size of which are varying. So as it loads, maybe I can walk through you what you are expecting to see. So the size of the bubbles actually indicate to you how many economic news are being published on the certain contract, right? So for example, if you're looking to trade Tesla, you can see that, oh, there are 434 publications over the past 24 hours. If you want to trade the SPX 500, you can see there are 387 contracts or 387 publications that are made. So let's go to one popular contract that is traded, right? Apple. So Apple CFD. So the detailed view would show you that the 24 hours versus 7-day average, it is buzzing, which means that there are more publications than usual. So the breakdown between news, web, and social media being mainly Twitter, would be 93, 5, and 2. So the trend analysis is that price may rise, and the top discussed topic is product release, right? So some of us may be aware as well. So this really gives you the fundamental handles that you need in order to trade. So if you want to go to a news desk, all right, and you can customize this on your own. If you have any questions on how to do this, feel free to reach out to us. But basically, what you can see is that you can curate this content according to your liking. So I have one already pre-made to US stocks only and a certain contracts that I want to see. So this will pull up relevant news for us. So again, what is the value proposition of this tool is really infobasity, right? Right now we're filled with so many news bombarding us all across and we don't know where to look. And so this will give you a very good idea of what is relevant, what is important. So while Trading Central covers the fundamental aspect of trading, Signal Center covers the technical analysis. So these are two tools that are very powerful that can help you in your trading. So now a little on to market bus too. If you notice, there are varying levels of asset classes that is present in market bus, and I want to share to you that we do offer all of them within MetaTrader 5. So we have your currencies, which could be one of the main theme of this trading challenge, but not forgetting, if you are a commodities trader, you would like to trade indices, you would like to trade equities, or other contracts, that would be available to you as well. And this function will be equally handy in breaking down the contracts that you may want to have a look at, right? So this is the view that you can expect to have. And if you click in, this is what you would see, the news feed that you can expect to have. So a little bit about what CFD is about. CFD basically stands for Contract for Differences. It works in a very similar fashion to Forex. The reason why it's called Contract for Differences is basically because you are trading on the prices, right? These are not contracts which have a physical component to it, meaning to say you are not actually buying and selling the actual product. You are just buying and selling based on the prices, right? So for example, if we were to look at a crude oil contract, WTI, which is something that we offer, you are not really buying crude oil, but what you are doing is buying the price of crude oil at the time in which you are entering. And when you exit at a price that is higher, that would net you a profit, right? So essentially, that is CFDs in a nutshell. For those of you who have more questions on what CFDs are, how do you go about trading them, be sure to check out our education content on our website. We do have different webinars and articles covering that topic as well. Otherwise, feel free to reach out to us. We'll be happy to walk you through that as well. Right. So that covers my platform walkthrough. Very quickly, I just want to go into the last portion before I end my session. And that is, how should a complete trading plan look like? All right, so we talked about three things that must be present in a trading plan: position sizing, entry rules, and exit rules. So this is a sample. Please do not copy it wholesale and use it as your trading strategy, but I would encourage you to formulate one on your own after today's session. So for position sizing, right, it addresses the question of how much should I be risking per trade. So as a recap to risk management, I mentioned that it should only be 1 to 2% of your account balance, right? So why? Because the reason is to allow the law of large. The reason is to allow the law of large numbers to play out. So at 1% risk per trade, you are able to trade up to 100 times until your account is depleted. So if your trade has an edge or positive expectancy, you are likely to be profitable in the long run, right? Risk reward ratio is something we've covered as well. Entry rules, right? So an example, within entry rules, we talk about trend, support resistance, and trigger. So what that would look like in your trading plan statement is, if price is above 200 EMA, right? That's the trend. And prices has reached or is close to a key support level, buying zone, and the RSI is displaying an oversold condition, then I will enter a long position, right? So what about exit rules? So exit rules would determine when do you exit the trade. So if price reaches your stop loss or take profit level, then I will exit my trade. So meaning to say, no matter how tempted you are to exit your trade manually, once you see price seems to be turning around, right, you gotta have the discipline to allow your trading rules to take over. So that is where the prevention of emotions, right, in trading takes place, by having a solid trading plan, by sticking to that trading plan, and making sure that you keep to it. So with that, I come to the end of my session. I do hope that it has been extremely informative to you, but we have not come to the end of the entire webinar. At this point in time, I do want to hand over the time to Chungkit for any questions that I have yet to answer. Chungkit, over to you. Is there anything that you spotted?
All right. Thanks, Yi Jie, for the really informative session. So far, based on the questions panel, we don't see any fresh questions. I think just now someone brought up some questions. We've already responded to them like instantly. So I think it's okay. Like, I think going forward, I think if anybody has any questions, you can feel free to write into us. We will respond to them. And in view that we do not have any new questions for now, I'd like to pass the time over to my colleague. His name is Bei, to share with you this exclusive perk that we've been talking about. All right. So let me perform a share screen. And
Thank
my
you,
colleague Bei, are you here? Yep.
Yes,
Over
yes,
to
I'm
you.
here. Okay, thank you. So thank you all for staying until this point, where you'll get to enjoy, well, not yet enjoy, but you get to see what you get to enjoy with this exclusive perk that comes with this webinar session. Actually, it all ties together. So if you're hearing what Yi Jie said just now, and then you feel like, it makes sense, but I can tell you this trading course that is offered by the professional trader, Mr. Ang Ka-yong, will give you a glimpse of what the trading world fundamentals is being built upon, and hence what you have just learned just now will make more sense. So one thing of all the things that I can talk about, I can only choose one thing if I want to leave you with, is the trading pillars that is in this trading course. So it includes the sentiment analysis, fundamental analysis, and technical analysis. So with the MT5 tools that you have heard from Yi Jie just now, it may sound really cool now. Wait till you couple these tools with the contents and the knowledge that you can acquire from this trading course. Okay, so this course is actually worth 97. I'm not trying to sell you here. I'm trying to tell you that you are actually eligible to claim a full sponsorship of this course. Okay, so besides all this thing that you can see from your screen, this course comes together with a Q&A and a very close support with your coach, Mr. Ang Ka-yong himself, and also an access to the student community where you can have like-minded peers to discuss about trading strategies and your trading moves. So how are you going to do to obtain this is very simple. I'm going to show you the step-by-step on how. So first of all, you may want to take a screenshot of this slide here, or if you want immediately, you can scan this QR code. It will lead you to this account opening page. If you have not seen it yesterday, or many of you have already submitted the account opening, which is great. And by the way, it is free of charge to open an account. First, you need to open an account. With the account, you need to make one trade regardless of the size of the trade. We just want you to practice what you have learned, and you can sign up for the trading course. The link for the trading course will be sent to all of you via the email. If you are in the registrants for yesterday's bootcamp, you should have already received the email. What you do is you click on the course, register for it, and you just send the receipt back to us. Okay, and then basically that's it. You receive your reimbursement in full in your trading account. So I'll leave this up, this QR code up for a minute for some of you to scan or to print screen. If you have any questions, you can also ask in the chat box or the question box. So I see a question, where would the recordings be available? So after this session, we are going to send an email to all of you, and you will see the recordings via a link that is will link you up to the YouTube for the full recordings of this session. Okay, next question I see, what if I'm unable to open an account due to my country of birth? Okay, this one is quite subjective. This one will reach out to you separately for the person who asked this question, because you may face with different regulations upon different countries. So we need to address that separately. Thank you for the question though. The competition is eligible for students 18 to 30 years old, including 18 and 30, right? Yes, you are right. Yes, I guess that covers all the questions. Fred not. If you have any more questions, I see another one now. That would be the last questions, by the way. If you have any more questions, while we reach out to you through the email, you will see a lot of contact points that you can reach out to us easily after the webinar. Okay. So last question. Sorry, I asked a question yesterday. Would it be explained or answered? Yes, all your questions that you have submitted yesterday, I think we received about like 10 questions. All of them have already been answered, and the The answers are included in the email that we have been sent out to you. Okay. I'm sorry for this last question. We will address this in the last email. In the email that will be sent out to you. Okay, so with that, I hope all of you have already scanned this QR code or you have taken a screenshot of this. I'll pass the stage back to Junkit.
All right, thank you, Bei, and thank you, Yi Jie, for joining this session and sharing your valuable insights to our participants. I think on my end, I would just like to make a conclusion to this session that we have today. First of all, I'd like to say congratulations to all of you who are here, because we do have many registrants to this competition, but not all of them actually tune in to this 2-day trading bootcamp. I think by the fact that you are here for the 2 days or even one of those days, it means that you are really committed. And we do wish you all the best in this trading challenge. Okay, we do hope that all of you could end up in the top 23 and then to bring something away from this trading challenge that we are providing for you. So I think that pretty much sums up. Do mark your calendar. Monday, 5 a.m. is where the trading challenge starts, and do look out for the daily leaderboard that will be published on Phillip Nova Instagram page. And I think with that, I'd like to say a thank you once again, all of you, and we shall end this session right here. Thank you and have a good week ahead, everybody.